$40 trillion in debt. That's what the U.S. debt calculator clicked over yesterday. Hi, my name is Kevin Retcher. This is the Till, Truth in Lending and in Life. And in life, when I look at this calculator right now, it's showing that I owe the government in my future earnings $119,346. My wife owes the same amount, my daughter and my two sons. We are collectively almost $600,000 in future debt due to the U.S. government and its spending. That's what we essentially owe. Now, I would love a little bit more fiscal responsibility out of Washington. I understand all the things that we do in this world, but I, as a business owner, have to manage my house, so to speak. You, as a consumer, have to manage your house. It would be nice if our government would do the same. Now, in reading articles recently, there is a hedge fund manager that was talking about this on CNBC today and basically say we can grow our way out of it. Now, that's super optimistic, and if that's the case, I would be super happy. But in general, would really, really love some fiscal responsibility. Now, last couple days, Treasury Secretary Bessent has been buying longer-term securities and doing a buyback program of buying some of the shorter terms that are running off and the 2s and the 10s to keep the bond traders honest from shorting the 2-year and making matters worse, right? So the old adage of you don't fight the Fed, we might say you also don't fight the Treasury. So we have a couple tugs and pulls going on, and I don't know necessarily, it's above my pay grade on what the outcome may be, but what I can tell you is over the last 5 days on the 10-year Treasury, when he announced the buyback program, rates dipped and the 10-year dropped as low as like 4.63, and then by the end of the day shot back up and closed over 4.7. So if you look at the week, we were in that 4.63 range, and I firmly think that the 10-year resistance is that 4.75. We close above that, we may see our way to 5%, which would cause higher interest rates. Now, higher interest rates is what the new Fed governor actually wants, Kevin Warsh, right? Higher rates means he doesn't have to raise rates on the shorter end because this work is getting done on his behalf. So we have a couple tugs and wars going on. What's that do for interest rates right now? 6.76 versus where I'm at. If you look, I'm at effectively about 6.5, and then on the VA, I do have one lender at 5.99. So while the 10-year is actually a bit higher than where we were last week, the margins may have compressed just slightly. Those rates might be in line with where I was last week, but in general, rates do change daily. One mortgage tip, one insurance tip, one real estate tip. We're going to get into that right now. My mortgage tip of the day is 43 back ratio. That's my favorite number. Take all your debts, including your mortgage, divided by your gross income. And if you're at a 43 back ratio, in my opinion, you're doing good on your budget. If you're looking to buy a house, figure out what your rental debt to income ratio is. Take your rent divided by your gross income, figure out what that number is, add all your other debts, figure out what your ratios are. Then do a budget. Figure out at the end of the month how much residual cash is left over. And you could probably take about 50 to 75% of that and add it to the rental side and act like that's your mortgage payment for a little while. Get used to that number. Keep putting that money away, and you'll be saving money toward home ownership. If you own a home already, check out your own ratio. Try to get that ratio down as much as you can. Second, insurance tip of the day. First and foremost, your coverage A on your home should cover the cost of rebuild, and you should probably have guaranteed replacement or replacement cap coverage over that number. So you want to make sure that you occasionally assess that your home is insured for enough monies. Secondly, make sure you have water backup. Some insurance carriers now have buried lines coverage for if you have an older home going out to the street. And make sure that you have a good amount of liability insurance. Lastly but not least, on your auto insurance, have the maximum amount that is needed or the minimum amount needed so that you can buy an umbrella that covers behind your home and your auto so that you have additional protection of liability. Real estate tip goes back to that home affordability of that 43 back ratio I talked in tip number 1. Make sure that just because a loan officer tells you that you might qualify for a higher number, know your numbers. And if you're a realtor, ask the loan officer what would be the number of the pre-qual if we kept our client at a 43 back ratio. Try to target that as a home of choice purchase price. 43 is the number for today. Now, let's get back into the till. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. If you have any questions, just want a quote, you can always just go to the website. Don't even need to call and talk to me, but if you would like a more specialized quote for your individual needs, you just give me a call at 703-799-5626. This is your Thursday market update. See you in the next video.